Thank you for joining us today. I'm here with Louis-Pierre Gignac, CEO of G Mining Ventures. GMIN trades on the TSX under the symbol GMIN and on the OTCQX under the symbol GMINF. Their current market cap is $895 million.
G Mining Ventures is a precious metal focused company. We're currently building the Tocantinzinho project in Brazil, which will be Brazil's third largest gold mine when we're in production. Obviously, we're looking to use TZ as a platform to grow into an intermediate gold producer with a medium-term objective of reaching 500,000 ounces of production, with additional mines brought into the company and growing a portfolio.
So G Mining Services has built mines in Ecuador and Suriname, and now G Mining Ventures is building a mine in Brazil. What has your experience been in Brazil compared to those other jurisdictions?
For us, it's been very positive. Obviously, there's the language barrier that's Portuguese, which for the most part has been something that our people have overcome fairly well. Brazil has a really strong mining culture, so we're able to recruit competent people that know mining, and we're also able to procure a lot of what we need for the project within Brazil. So whether it's actually mill components or consumables, most of it can be procured within country, which is a tremendous advantage. So I think it's one of the leading jurisdictions, to be honest, in the Americas and definitely in South America.
What percentage of your workforce, once you're producing, will be local?
Yeah, so like for the construction part, this is one of the projects we've had the least amount of expatriates on a project. So we had about 116. On other projects, we would have up to 250, even 300 expats. So when it comes to the operations, a lot of those expats are really there for construction. So we might have a dozen or so remain after for operations. So very, very low number.
2023 was a big year for advancing TZ. You're 80% complete and trending on time and budget. Can you update us what is happening on the site right now?
So we're still busy with construction. Obviously, there's still 20% to go. So most of the construction right now is focused on the process plant area. Things are progressing well. Our primary crusher or reclaim is largely complete. Grinding mills, which is our critical path, the installation is ongoing and that's going well. So we're in the process of installing ring gears, lubrication systems, so really into the finer details of the grinding circuit. Our tailings facilities are largely complete as well. We've actually demobilized our earthworks team and concrete teams with most of that work behind us at this point. The focus right now is really on operational readiness, getting ready to start commissioning activities, which will be essentially starting in the month of March.
What are you most proud of to date?
I think what I'm really happy about since we essentially created the company is kind of the timeline that we've stuck to in terms of actually acquiring a project, doing a feasibility study, putting the financing in place and kicking off construction pretty much as, we had set out right when we created the company. So that's one of the things I'm most proud of is, it's always difficult to get the timing right in the mining business. Things can take a long time for projects to advance, but that's really what I'm most happy about. And now that we're looking towards commercial production in the second half of this year, we'll be generating cash flow months away at this point.
So commercial production is planned for the second half of this year. How much ore has been stockpiled to date, and how much gold do you anticipate the company will produce in 2024?
Our mining pre-production activities have been ongoing for a little while now. The initial months was mostly focused on generating waste from the pit for different construction needs. And since December this year, we've been mining ore. Now that we have our own assay lab on site to do grade control. So we stockpiled at the end of February, we're up to 740,000 tons of stockpiled ore, and we're looking to stockpile up to 2.4 million tons by the time we're in commercial production. We haven't put a formal guidance out. If we go back all the way to the original feasibility study, which was in February of 2022, we're maybe 1 month, we started maybe 1 month behind that schedule. So we're looking at somewhere between 70 to 80,000 ounces this year.
So let's talk about your cash position and free cash flow. So you're fully funded to free cash flow. How much cash do you have on hand, and what's the remaining project spend, and when do you expect to achieve free cash flow?
What we essentially communicate to tie in with our financials is kind of our position at the end of the year. So we had 52 million US at the end of the year, still 75 million term loan from Franco Nevada to pull on. So that gives us a total capital available of 127. million. We still have 81 million to finish the project, to which we add working capital requirements. So we've already invested in building up inventories, but we still have another 12 million or so to spend, plus corporate costs for another 14. So at this point, we're sitting on about a 20 million cash buffer to get to positive free cash flow.
And that doesn't include the potential exercise of warrants later this year.
That excludes the warrants. So if those warrants get exercised, that would bring in essentially 70 million Canadian. And all the numbers I'm speaking previously were all US dollars. That would bring in 70 Canadian million in September, should they get exercised. So
the 2022 feasibility study showed an AISC of $681 per ounce. And in a September interview, you mentioned it would likely fall in the $700 to $750 range with inflationary pressures. Do you believe the project is still on track to achieve this? And what costs have varied the most compared to the 2022 feasibility study?
That's still a range that applies based on our expectations. So really on the mining side, we're feeling comfortable with our unit costs because we've been mining for several months now. On that front, it's mostly the fuel that's a higher cost for us, with the fuel price being higher than our feasibility study assumptions. But we've had wins on the process plant side, with electricity costs being locked in at a more favorable rate. And we've also secured our reagents supplies contracts for all our reagents and grinding media, which is coming in like within 2-3% of our feasibility study costs. So yeah, on a net, we're looking at maybe 5 to 10% higher than what we had in the feasibility study.
Do you see fuel costs staying flat, or are they trending down?
Yeah, they were trending down slightly in the last few months. So that's kind of trending back in the right direction, but generally higher than what we had planned.
G Mining has an excellent track record of building big mines on time and budget. In the past, these projects were handed off to mining companies to operate, but now you will be operating a mine. What steps is the company taking to prepare for a smooth transition between construction and operation? And what do you anticipate will be the biggest challenges for G Mining in the early stages of commercial production?
Most of our people come from an operating background as well. And like I was just mentioning, like the mine has been operating 24 hours a day since April. So that whole team that's been put together for the mine is just going to continue on for operations. So there's no real change that takes place there. Same goes for all our G&A departments. So HR, health and safety, accounting, supply chain. They've all been put in place to support construction and actually get downsized somewhat to support operations going forward. So there again, like we're already staffed up and running this thing. Really the key piece now is the process plant. We've essentially recruited some very strong people, Brazilians, to head up the process plant team. And that's the team that we're finishing our recruitment for as we're getting ready to start those, trainings and getting ready for commissioning. So we're feeling very comfortable on that front as well. But yeah, in terms of your point, the key challenges is really more on the process plant side. And so what we've done is we've made sure to have a really strong commissioning team. So we'll have additional experts brought in to support the operations team as they look to commission. And that's really just to provide additional comfort, all hands on deck approach to deal with small problems as you start commissioning the plant.
You want to grow G Mining to a 500,000 ounce per year producer in the next 5 years. America's focused, an asset that can produce, let's say, a minimum of 150,000 ounces a year or better, and ideally construction ready by the end of next year. How many projects do you think fit that criteria, and how many have you completed due diligence on, and where are you seeing, feasibility or pre-feasibility studies kind of falling short?
We're very much in M&A mode of looking at projects. What could be the next project that would be a nice fit for us to bring into the company? So as you point out, having that ability to redeploy our construction team and effort towards building another project next year when we're generating cash flow would be ideal. We're not limiting ourselves to essentially construction ready projects. So if there are projects that take a little longer to mature before they're ready for construction, we're obviously looking at those as well. We've done over a dozen due diligences on various assets. Most of the time we do, our due diligence focuses on geology and making sure that we're happy with the nature of the ore body, how it's been estimated, because normally that's the part we can't fix. We're kind of stuck with what nature has provided us. Normally, I would say more often not, probably half of the projects don't pan out. right from the geology side. And then after that, it really boils down to what the economics are in terms of CapEx, OpEx, and being able to generate sufficient returns once you build in acquisition costs. So that's really the challenge for us. That's how we look at M&A. To create shareholder value, we build in acquisition costs and all the CapEx the way we estimate it, which is something that's realistic. And that's often the challenge with junior companies is they end up putting promotional numbers in there to make the numbers look nice. But reality needs to sink in, and that's what we're looking to execute on.
When you're doing this due diligence and you're in the data room, are you guys creating your own geological model and block model and doing a full, brand new estimate?
Oftentimes we do, or at least we'll run checks to make sure that, if we run different estimation parameters, different grade shells, different, sensitivities to it, that we come up something close. Or in many cases, once we get further down the line of due diligence and it becomes very serious, and we want to start making it our own, we'll actually build up a resource model really completely from scratch internally.
What are G Mining's exploration plans in 2024? When do you start to ramp up exploration drilling at and around TZ? And could you ever see G Mining making a strategic investment, say like a 9.9%, taking 9.9% interest in an earlier stage junior exploration company?
So this year we're planning to spend about 4 million on exploration. So we'll have a first drill coming in March, so starting up fairly soon. And we plan to bring in a second drill in June to be able to drill more meters. So this is really building off kind of the exploration effort that was done last year, which consisted of flying geophysics, completing soil geochem, really gave us a better baseline information on the whole land package. And with that, I think, we have something like 19 target areas that we want to further investigate. So we'll likely do trenching, field work, and follow up with some drilling on several of these. So this year we're going to focus on about a 5-kilometer radius around our project. With the land package that we have about 35 kilometers of strike length on this trend that now clearly shows up with this baseline information we have. So that's really the focus. We'll be spending, about 4 million, which we feel comfortable with given our current cash position, but are obviously treating that as discretionary capital until we're generating our own cash to invest in exploration. Your second part of the question of making 9.9% strategic interest, investments in companies, that's perhaps something that we could do, just to take a stake in companies that are really progressing well, but maybe don't have all the right ingredients yet for us to make a full acquisition, but at least position ourselves to be better positioned to maybe take it completely out at a future date.
And I'm just thinking in my head, there's a lot of good projects I think that are out there, but by the time they get their permits and would be construction ready, you're talking 2030, and at their valuations now, it seems like there's some good opportunities out there.
We're seeing this disconnect right now between gold price and equity valuation. So yeah, it's an interesting time to take positions at this point.
GMIN has created significant shareholder value. What would you say to those investors who feel like they've missed the opportunity to get in early, and what can we expect from G Mining over the next 12 months?
I would say there's still upside, definitely in our share performance and in re-rate as we get closer to commissioning and being in commercial production. So I think there's still upside to be had in that period. And so also I would say there's lots of exploration upside with our land package that investors would be benefiting from from a long-term investment perspective. And then maybe thirdly is just the fact that we're looking to put in production this mine in a gold price environment that is reaching all-time highs right now. So definitely a lot of, gold price sensitivity to the upside. If I look at, some of our valuations from our feasibility study, we didn't even have sensitivities up to 2100, 2200. From our project feasibility NPVs, we're looking at, something in the range of 1.1 to 1.2 billion US. So I still feel based on our market valuation, we have lots of room in there to grow.
So our 3L's valuation for G Mining, we calculate at $2,100 gold, we calculate a net asset value of 1.6 billion and a 0.63 PNAV multiple. And, we believe with the track record of G Mining, and where you're at with the mine, we would expect you to trade around 1 PNAV multiple. So there's still, I think, excellent upside for investors. That would be, approximately 50 to 70% upside from the current share price, which today is $2.
That's a good reference point and a good range of upside that's out there, I think.
I don't think investors have missed the boat on G Mining. So thank you for joining us in our first 3L webinar, Louis Pierre, and we look forward to seeing TZ progress towards commercial production later this year.